What up, folks? Today, we're going to be talking about the Robinhood IPO. So if you were thinking about buying a stock, investing, hopefully for the long haul and not short-term trading, this show is going to be for you. What's up, everybody? Kamari Ellis here, the Finance Rebel. It's Wealthy Wednesdays, and what do we do every Wealthy Wednesday? We talk about money somehow, some kind of way. And today ain't going to be no different. So today we're going to talk about Robinhood. To be particular, the Robinhood IPO. And so Robinhood is announcing their IPO. They actually announced it a while ago, but they just announced the actual date. So they're planning to go and launch the IPO, go live, and talk about on the 28th of July. So we get about 7 days to get ready. So again, as we get ready to go, we're going to talk about a couple things. Robinhood is going to be on focus. I want to share something with y'all real quick. I had the honor and privilege of making a media appearance yesterday talking about the stock market. So I don't know if y'all been paying attention, but the market fell yesterday by about 3%. Nothing major, but as usual, when people see the market fall and they don't have a plan and they haven't really educated themselves, they get panicky. And who's always there to cover it? The good old media. So the good old media called me up and said, Kamari, you got time to come on at the last minute? I said, sure. And so I got a chance to get shown on local news. I think it aired at like 4 p.m. and 5 p.m. Melanin reigns supreme. Welcome, welcome, welcome. Des Dot is here. Nicole's here. Welcome, welcome, welcome. But, I think I had like 5 seconds of fame yesterday. Didn't come with a check, and I didn't have to pay anybody to get on air either. So they respect my talent, my work ethic, and just all around trying to educate the overall community about this money. So let's check that out real quick. If you have any questions about yesterday's crash, feel free to go ahead and put them in the chat. But like I said, we are going to be talking about the Robinhood IPO. So the majority of the show, we'll be talking about the Robinhood IPO. Again, go ahead and throw those in the chat as well. Throw those questions in the chat if you have any questions. So let's go ahead and check this out. Give me 1 second. I should have had this ready already. Give me 1 second. Oh, man. There's a lot on here. That's not what I wanted. So bear me 1 second, y'all. I think that was 2 days ago. That was 2 days ago. All right, so let's check this out real quick. I got my setup a little different today, so I'm struggling just a little bit, but we're going to make it through.
Impact businesses. Some of the hardest hit stocks Monday, United Airlines and Carnival Cruise Lines. On the global scale, many countries are lagging behind the United States in COVID vaccine distribution, and many also have tighter COVID restrictions. The Dow was trending up to start the day Tuesday. Katie Johnston for CBS Local News.
And I shared the wrong link. Listen, everything is live and direct here, folks. So there is no faking. There's no faking. I see we got a couple more people on the IG side. Najee Grant, how are you? Mid-Atlantic, how are you, sir? Where is this link at? Where in the world is this link? It's funny, I had everything all set up, and now I can't find it. But I know where it is, so I can get it. I have to hire me a production crew sooner or later so I can stop handling all this stuff and just focus on talking to you all. So let's see. Here we go. But basically, well, I'm not going to give it away. Here we go. I got it now. I got the right link this time. Vax. So here we go. And I don't think I shared the audio. Like I said, it's only like 2 seconds. Let me do it right. Let me do it again. Sometimes you got to click all the buttons. And when you miss one click of the button, you miss out.
To not make any percent, stocks tumbling today. The Dow closed down more than 725 points. That's a decline of more than 2%. The other major indices also finished strongly to the downside. Experts say your best bet for now is to not make any bold moves, but that it's a good idea to take stock of where you are and your goals.
I don't think there's any real reason to panic or pause, but listen, now is always a great time to go back, take a look at your portfolio, see if it's in alignment with your overall life goals. If you plan on retiring anytime soon, let's say in the next 5 years, you might want to go back and revisit your asset allocation.
Even with today's decline, the S&P 500 index is just 3% below the record it reached last week.
All right, so y'all see it. So I had like 5 seconds of fame yesterday. Got a couple calls. That's about it. But it's funny, the same thing happens every time the market falls. And again, the market didn't really fall that much, right? The market is supposed to go up and down. It's a normal process. It's part of the overall structure of the stock market. But we have been programmed so much that we think the market is only supposed to go up. Listen, there's opportunities in the market when the market goes up. There's opportunities in the market when the market goes down. So you just have to be an astute investor and study. Don't follow a lot of the shenanigans that are happening online, and do your research. All right. Surface Imprints, what's up, man? How you doing? So let's see who has joined us before we get the party started. Curtis Davis. All right, what we talking about, Curtis? Well, that's not a crash. It wasn't a crash. What's up, Jose? How you doing? Curtis says there were so many stocks on deep discount. I wouldn't call it deep discount, but there were some things that were on sale. Don Johnson, what's up, brother? Excuse me. All right, and Jose says, hire your children to do the setups. Listen, my kids be busy, but you're right. I think I am going to have my son do more. Yep, you got it right. Yeah. Hey, Katisa, how are you? Welcome. Happy Wednesday to you all. And Jose says it was a pullback. I don't even know yeah, technically it was a pullback, but it wasn't really a pullback. And what happened today? We saw a bounce. So again, a lot of times people get nervous, they get anxious. They think they can control the market, where you literally have millions and millions, sometimes billions of trades every day in the market. So you can't really control it. You just kind of got to watch it, pick the spots and study it. Yeah, I guess. I wasn't super excited, right? To me, it was nothing to write home about. Now, if the market would have kept, let's say the market would have fell today, and we're looking at a potential for it to fall tomorrow, then yeah, my ears would be perked up. But it's not. So again, nothing major, in my opinion, nothing major. So, all right, y'all. Question of the day. Who is thinking about getting the Robinhood IPO? I've got a couple of requests for this. A couple of people in the Finance Rebel Academy on Facebook asked me about it. Got a text about it. Somebody in the text group asked me about it. So we're going to talk about it. So again, who is thinking about investing in the Robinhood IPO? I know y'all are all clamoring at it. Y'all all love IPOs, but I got to give y'all my official IPO statement. I hate IPOs. IPOs suck. Why do they suck? Because usually your everyday investor gets robbed when they try to buy IPOs. What is an IPO? An IPO is the day that a public company, the IPO is the day that a private company goes public. So if I started my own company, Ellison Associates or whatever, it was just me. And I say, you know what? I want to take on some investors because I want to grow my business. I want to expand my business. That's basically what Robinhood is doing. I go public. And usually, not always, but usually the process for going public is I meet up with some investment bankers. They figure out how to best market it because that's what really an IPO is, an initial public offer. It's a marketing event, right? IPOs are major marketing events. And so I say, I want to raise some money. I go to the investment bank. They say, we're going to market this out to hedge funds, private equity, high net worth individuals, and you get the benefit of getting the major public, right? Your mom and pop investors in on the deal. But guess what? Guess who usually gets the deals first? The hedge funds, private equity, some venture capital, some private holdings, big banks, pension funds. But guess who doesn't get first crack at it? That's right. Average, everyday people like you and I. Average, everyday people like you and I. So what normally happens on IPO day, and I know I'm kind of delaying this, right? Because I want to give you all the real important stuff up front. So you'll listen to it, even though y'all seem to go crazy over these IPOs for whatever reason. But on the day of the IPO, all the previous investors, all the first investors get first crack at it. And then they have what's called the IPO or the IPO price. And let's say the IPO price for Robinhood is going to be like, let's say 23 to 28 bucks. We don't get that price. Those people that I just talked about, the hedge funds, the banks, the high net worth individuals that have wealth management accounts at some of the big banks, your JP Morgans, your Goldman Sachs, they get the IPO price or better, depending on when they got into the deal. They get that price. You don't get that price. I don't get that price. Now, when I worked institutional, I would get that price for my clients. But I personally, I don't get that price. And then when the market opens or when they decide to post it for the day, on the day of the IPO, you get the market price, the first market price. And then it's business as usual. So the market is an auction. So if the price goes up, you're going to buy it. If the price goes down, you can buy it. What typically happens, and this is hard historical data on IPOs, what typically happens on IPOs is they tend to run up, especially the real popular ones, right? All the fanfare, everybody likes to run in, all the sheep, right, come into the market and they follow one along. Herd mentality 101. They buy the stock. Again, it's an auction. It functions on supply and demand, economic basics. Price goes up. Supply hasn't changed, right? So the price goes up. People are bidding it up. And then people usually pay a higher premium than everybody else. And then what normally happens is a day or two later, or 3 or a week later, the price goes down. Sometimes the same day, the price will go down. So that's why I always tell people to wait. Wait. If it's a good company on IPO day, it'll be a good company a month after the IPO. If it's a good company on IPO day, it'll be a good company a year later, right? A lot of times we get into chasing returns, and that's where a lot of people get jacked up. All right. So before we get going, let's see the business bully say, what's up, Dave? How are you? Digital's, how are you? Welcome. Melanin Reign Supreme says, should I get the Robinhood IPO because I already used the app to trade? All right, stay tuned. We're going to talk about it. By the way, Everything that I talk about here is for entertainment and educational purposes only. Entertainment and educational purposes only. This is not investment advice. All right, Junior's watching detail. That's my son right there. How are you, son? All right, Mid-Atlantic says it's going to wait about 90 to 120 days to see how Robinhood does. And my man Eddie Colson down in Baltimore is in the building. So what's up with y'all? All right, so let's talk about it, y'all. Let's talk about it. So Robinhood, I have the S1 prepped, and there was a pretty good article in the Wall Street Journal as well. So we'll take a look at both of those. And so as we see here, let me see, can everybody see that? Robinhood expects the IPO to come out, value trading at $33 billion. $33 billion. Melanin Reign Supreme says he knows me personally. Who are you? I don't know the tag. And then plus I get, I'm starting to forget people's names. I just see the tag and it's like, well, who's that? But if you know me personally, hopefully that means something. All right, so here they just talking about how Robinhood transformed from a retail trading platform ahead of its IPO. So as all y'all know, Robinhood definitely is positioned to be the beginning investor slash trader, preferred brokerage account. Right? It's pretty easy. It's pretty safe. Hassan, how you doing?
Hello.
I'm gonna have to start making you a production crew. You ready?
Financial Rebels.
Yes. Excuse the intermission, folks. My son just came in.
Hello, Financial Rebels. Are you rebelling against all the finance on this radio?
You ready? You ready to be production crew? So then I can hire you and I can get a great tax deduction. So, like I said, Robinhood is a great, let me back up. I won't say great. Robinhood has the eye of a lot of folks when it comes to beginner investing. It's simple. A lot of people use it. I know a lot of people were upset when we had the whole meme stock crash with GameStop and AMC. But we'll get into that a little bit more as well. Oh, okay. Yeah, I see you. All right, so here we go. The trading app Robinhood Markets expects coming initial public offering to give it market value of about $33 billion. So out of all the shares they are selling, right, there's about 52 billion shares that they will be putting out on the market that they're expecting that people will buy. And when you look at the article here, it says that they're going to be pricing this at about $38. So yeah, they're offering about 52 million shares. 52 million shares. So you can do the math. 52 million times $38. That would be the low end of the market, right? And so here it's talking about what I just talked about, the whole GameStop thing. Millions of individual investors flocked to Robinhood this year to ride the rally in meme stocks. By the way, I think meme stocks suck. But back to regular programming. All right, GameStop and cryptocurrency. So a lot of people are starting to use Robinhood to buy Doge. If y'all been paying attention, I brought I brought $50 worth of Doge. And, I told y'all Doge was trash. But I brought it just as an illustration point. When Doge went up to 72, I think I got out around 67. However, all that hype, the GameStop hype, the Doge hype, all of that adds up to transactional fees for Robinhood. So it's a great way for them to make money. And they're going to continue to make money because guess what? Social media is here. Nobody studies, or a lot of people don't study. I know my Finance Rebel community studies, right? I know y'all study. I know y'all stay up on it. But a lot of people don't study. So they just blindly run into these offerings, these IPOs, or these quote unquote fancy stocks that people like to talk about, some of them that don't make any money, right? And they pump it up. I saw somebody said Elon Musk was on talking about crypto earlier, talking about how he actually pumps the price of crypto. And he actually admitted that he pumps the price of crypto. I haven't gone back to see or watch that yet, but it was from a pretty reliable source. My man Jimmy over at Buy the Hood was talking about it, so I know he's not lying. But I'm going to go back and watch that. But you're seeing that over and over and over again in the market. We see these celebrities, because we're immersed in celebrity culture. They talk about something, talk about a stock, they talk about a crypto, it goes up. Typically, they get their money and then they run. 50 Cent did it years ago with penny stocks. Another reason why I hate penny stocks. All right. But just going forward, its IPO is one of the most anticipated of the year. So when they say the IPO is the most anticipated of the year, you know what I think? I'm thinking that's code sign for cash money. Cha-ching, ching, the register is ringing for all the investment bankers that are going to get paid fees on this, along with Robinhood, who's going to make more money off this deal. So it's going to be very, very, very interesting. All right, so Robinhood last sold shares to startup investors in 2020 at nearly $12 billion valuation. So when they say $12 billion valuation, that is what the entire company is worth. Now they're looking at it being anywhere from about 40 billion. So that's a hell of a increase. Talk about appreciation. Robinhood is well positioned. All right, so Robinhood's growth continued into the second quarter, driven by new users opening accounts and an increase in options. So they're also doing options and cryptocurrency, right? The company expects to report second quarter revenue between 546 million and 575 million, more than double what it generated a year ago. And I have some of those numbers in the S1 as well. Jay Nice World, how are you? All right, the number of funded Robinhood accounts. So when they say funded, right, they have kind of the entry level accounts or the teaser accounts where you can just open an account with no money in it. And then you have the accounts where people have actually deposited money. So those are the funded accounts. So again, the number of funded Robinhood accounts increased by 4.5 million between the end of March and the end of June, reaching 22.5 million in total. So Robinhood has done a great job of marketing, again, and positioning of itself. You see they're making money. Y'all know anytime we're talking about stock evaluation, we're talking about business valuation, right? We're talking to look and see how well this business operates. Does it operate at all? Robinhood is actually making money. All right. But the company's growth is decelerating from the torrid price earlier in this year. Well, of course it's decelerating because we haven't seen all the meme stock, again, the GameStops and the AMCs and all of that pipe down. You know, the Wall Street bets folks have piped down a little bit, but it seems like they're simmering and about to do some more as well. Chubb Mac, how are you? Pat Anno2, how are you? Welcome. All right, so I'm not shocked that it has slowed down some. Not shocked at all. Not shocked one bit. All right, so let's continue on, and then we'll go on over to the S1. All right, so at 33 billion, Robinhood would be valued at roughly 20 times its revenue over the 12 months. All right, ending June 30th. So over the last year, their valuation, again, is 20 times what they do in overall revenue and about $1,500 per funded account. So they're saying that they're making roughly $1,500 per funded account. That's how much money they're making. So again, it's interesting. Now they're talking about the rival Charles Schwab. Now again, I apologize for everybody who can't watch the screen because I do have this article up on the screen that was in the Wall Street Journal about, was it a day or 2 days ago? And for all those who are watching the podcast. So as always, I will try to use my words, enunciate well, so everybody can follow along and understand it. But Charles Schwab is valued at about $4,000 per active account, though Charles Schwab's customers hold substantially more assets than Robinhood customers do. Robinhood is also much more newer, right? Robinhood started in like 2012. Charles Schwab has been around for at least 3 decades. So it's not an apples to apples comparison, but I know why they're doing it because, again, the new kid is on the block, and they're talking about it, and it's a great comparison. All right. So Robinhood reiterated that it expects to sell its users between 20 and 35% of its IPO shares, or up to 18.3 million shares as of Monday. And so now they're just talking about divvying out how they're going to distribute the shares. So I'm not going to read all of this, right? But you get the gist, because I also want to get to the S1 real quick. Now, Robinhood also said the venture capital arm of Salesforce, didn't know Salesforce had a venture capital arm, was interested in buying as much as 150 billion of its stock at IPO price. Now, remember what I just said earlier, right? Remember who I told you gets first pickings? Venture capitalists, hedge funds, mutual funds, high net worth individuals. IPOs usually are not for mom and pop investors. Again, they get a lot of love from mom and pop investors, even though the IPOs don't love them back, but they still put their dollars down. All right, but they're talking about putting down 150 million. 150 million. 150, 7 zeros after that. That's a lot of change. That's a lot of change. All right, so Chief Executive Vlad, I always forget how to say his name, Tanev, and Robinhood co-founder Benji Bayat were together maintain nearly 2/3 of the voting power in the company following the offer. This is very, very important. Anytime you are looking at any company, especially an IPO, you want to understand how the voting structure goes. Now, I'm going to, again, this will be more in the S1. We're going to look at the voting structure. It's very, very important. It's very, very important. So each owns a special class. So, right. All right. Each owns a special class, with Robinhood Chief Financial Officer Jason Warwick plan to sell as much as 110 million of their company stock. So they just hit jackpot, right? They're going to get 110 million potentially before taxes. They're going to get hit hard by the tax man, but it's all good. Oh, hey, Gloria. Gloria says she saw me in the news. All right, cool. I didn't think anybody saw it. I thought like 2 people saw it. I was on there for like 5 minutes. Actually, Gloria, I just showed the clip to everybody. So again, they're going to get a payday of 110 million bucks. They're split in between the 3 of them. I know it's not equal. Everybody's going to have their own different stake in what they got. But again, that's a lot of money. That's a lot of shekels. So they are going to make out quite fine. They're going to make out quite fine. So again, one of the reasons why people do IPOs, when I say people, I'm talking about companies. Why do companies do IPOs? 9 times out of 10, they are looking for an exit or an equity pay, not an equity, a payday. They're looking to get paid, right? You have people that come in the beginning of the company, put money up. You got your angel investors. You got some venture capital investors, some mom and pop, maybe some borrowing, some family and friends. And they've had their money locked up for a long time. Again, Robinhood started in 2012. That's when they incorporated. So the people who initially put their money in want to get it out. It's 2021 now. So what are they to do? Right? They say, hey, I've been riding with you now for about 9 years. And I'm sure it's longer than 9 years because the organizational part was 2012. That's the official part. How much work and time and effort went into formulating the idea and business plans and raising the money before the actual incorporation took place. So people want to get their money back. People want their bread. All right. So it's again, they want to see what they can get. All my setup is jacked up today, y'all. My setup is jacked up today, but I'm working on getting my new setup together, so we won't see all these jankiness going forward. All right, so let me look at some of the questions, the comments, and then we'll switch over to the S1. Now, S1, what is an S1? S1 is the securities filing that any company that wants to trade their stock publicly has to file with the SEC. This is one thing a lot of people get confused though. The SEC is not giving their blessing. The SEC is not saying this is a good company, bad company, great company, or a sucky company. They're just saying that they disclosed what they needed to disclose. They filed the proper paperwork. They paid the proper monies for the filings, and they're good to go. Again, don't look at the SEC as it's a stamp to say, oh, this company is a good company. You'll get your feelings hurt. All right. Okay, we talked about that. All right, Jose says he's not copping hard shares till I see what their earnings are after 3 quarters. That's a smart man right there. All right, what's up, Jamal? How you doing? Unless y'all only financial institution is American Heritage, Federal Credit Union, they don't get down with Robinhood. Gotta have another institution. Yeah, but guess what? If you got the Robinhood app, you can buy it on Robinhood. So, your credit union or your bank doesn't necessarily matter. Not even your brokerage account. All right, TB. TB, you got a question up there. All right. So, TB, hold that question. Don't let me forget it. Don't let me forget it. Let me do this. I want to pull up the Robinhood S1. As I promised, run through that real quick. We'll do a JCW, MKW. Welcome, welcome, welcome. All right, so let's look at this real quick. Where is the S1 at? Let's see. And I have way too many windows open. All right, here we go. Here we go. All right, so again, not going to go through this whole S1. Why? Because it's 431 pages. I don't think any of you want to stay here and hang out with me all night long. And y'all know I need my vittles. If y'all rock with me every week, y'all know I usually don't get to eat beforehand. So I tend to wait because I don't want to get the itis when I'm sitting to talk to y'all. I don't want to nod off like Nori on an interview. So I try to stay up. So I'll wait to eat later, basically. All right. So here is the S1. Again, this is the document that all companies that are filing initial public offerings file with the SEC. All of this is about securities law, tax law, and corporate law. All right. So Robinhood incorporated in Delaware, but they're headquartered in California. This here just lists who's running the show over there, which is Vladimir, or Vlad, as many people call him. All right, we're just going to kind of skim through this. I will add the link to this in the YouTube channel and the Facebook So if y'all wanted to take a look at it, I'll also add the link to the Wall Street Journal article that we went through over there as well. And when the podcast is up, it'll be in the show notes as well. So, all right, so here we go. So I went through, highlighted some of this. All right, so here's the issue I was talking about earlier when we were talking about the different share classes, all right? So first paragraph, this is the initial public offering of Class A common stock by Robinhood Markets. We are offering now, these lines are blank because they don't know how many shares are going to get sold. All right, we're offering blank shares of our Class A common stock to be sold, and the offering the selling stockholders identify in this perspective. We are, our founders and our chief financial officer are offering an additional blank, 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 because they haven't determined it yet, shares through our Class A common stock. We will not receive any of the proceeds of the sale of the shares being sold by the selling stockholders. Now, here's the thing. They're going to get a payday. But what happens is when you get into these IPOs, a lot of times they ban the founders from selling the stock right away. Because what would happen if you just sold the stock right away? If you got the money right away, people would just sell. And then it creates panic. And then it doesn't give the market any kind of stability, right? So if you get a whole bunch of people selling at the same time, it will potentially tank the stock, make the stock price fall. So that's why by law, they make them hold out on selling anything. Can everybody see the lettering here? Do I need to blow this up? Let me know. I'm going to blow it up anyway. Blow it up anyway. Now that might be too big. Yeah, well, you might be able to read it, so I just have to go side to side. Again, if you're watching live on IG, appreciate you being here. We're showing some things on the screen, showing some documents, showing some articles on the screen. You can't see it. If you want to hop on over to YouTube, just going on over to the bio, click the link, and then click the YouTube button right there if you want to see what's happening on the screen. All right, so this is what I was talking about. This is what I was talking about. It says we have applied to list our Class A common stocks on the NASDAQ stock market. Typically, any technology-based companies typically list on the NASDAQ. So you have your New York Stock Exchange and you have the NASDAQ and some other smaller ones. But that's the major one, NASDAQ and the New York Stock Exchange, all right? And then they go on to say we have 3 classes of authorized common stock. Class A common stock, Class B common stock, Class C common stock. Collectively, our common stock, the rights of the holders of Class A common stock, Class B common stock, Class C common stock are identical. They're not identical, except with respect to voting and conversion. So how do you say it's identical except, right? So that's something that should make you raise your eyebrow right then and there. All right, so each share, let me find this so I don't lose it. I'm sorry, y'all. All right, each share of Class A common stock is entitled to 1 vote per share. Pay attention. Each share of Class A stock on a share for share basis on the date. I skipped line. Sorry. Let me go back and reread this again. Pay attention to this. This is important. All right, so each share of Class A common stock is entitled to 1 vote per share. 1 vote per share. That's Class A. Keep that in mind. Each share of Class B common stock is entitled to 10 votes per share. Again, Class B common stock, Robinhood IPO gets 10 votes per share. That's important. And it's convertible at any time to 1 share of Class A common stock. All right. Shares of Class C common stock have no voting rights. Again, shares of Class C common stocks have no voting rights, except as otherwise required by law, yada, yada, yada. We will convert into shares of Class A common stocks on a share for share basis on the date or time determined by our board of directors following the conversion or exchange of all outstanding shares of our Class B common stocks into shares of Class A. So this is what's called, see, I wrote notes here, right? This is what's called founder stock, right? So The founders will carve out stock, right? The classes of stock to protect their rights, their privileges, what they're entitled to in this company that they built. Quick side note. A lot of people think the CEO runs the show at these corporations. While they handle day-to-day operations, typically the CEOs get their marching orders from the board of directors. Again, they get their marching orders from the board of directors. So I want y'all to understand that. A lot of times we're straight on focus on who's got the title, right? And who does this and who does that. All the while, they don't realize there are other people in the background making things happen, move and shake. So it's not always the front person or the spokesperson, all right? So, excuse me, y'all. So again, you have these three different classes of stocks. They all have different voting rights. They all have different have different voting rights. They have different conversion rights as well. So again, you want to understand that. And so they go on to say that upon completion of this offering, all outstanding shares of our Class B common stock will be held by our founders. So it goes to list the founders, Vlad and Baju, and they are related entities. So that means that they have, how LLC Twitter and I guess LLC Instagram at this point, even LLC TikTok loves to give their advice about having corporations and trust. Most of the time, the information is trash, stinky dog doo-doo trash. But here is a live example of people actually having multiple entities to protect themselves from one, liability, right? Basically, fancy word for getting sued, right? Protect their money from getting sued. And I'm sure it has some kind of tax advantage situations as well. All right. Trey 354, how are you? Philly Amped, how are you? Trey Snatch in the building. Old Bloomin', how are you? Welcome. So, they just shared that. Now, going further through, in this S1 right here, this is interesting. Now, this is interesting. All of these companies are the companies that underwrote this deal. You have Goldman Sachs, you have Barclays, you have JP Securities, BMO Capital, Academy Securities, Citigroup, JP Morgan, Wells Fargo, Rosenblatt. But then they have Loop Capital Markets. Now, this show is for the Black community, so I have to highlight this. Loop Capital Markets is a Black-owned company. It's a Black-owned investment bank. I'm trying to think of the brother's name. They're out of Chicago, though. I want to say Jim. I can't think of his name off the top of my head. But again, that's a Black company that's going to be able to make money off of this IPO. And they're major. They're just not some little mom and pop shop either. All right, so continuing to go through. All right, so now we get into some of the pretty graphics. And I didn't mark down this right. So here's the thing. Interesting. I talked about this a couple months ago. So Robinhood's mission is to democratize finance for all. Now, again, this show is for helping folks raise the financial IQ, especially those in the Black community. Robinhood, however, would not take a stance on George Floyd or Black Lives Matter. So I find it interesting when they say our mission is to democratize finance for all, where they won't talk about many of the people who are being singled out by police brutality. So having so many social justice issues and being underbanked is something that is really, really hard hit in the Black community. So again, I'm surprised they would not take a stand on this. But something to think about. Now, getting to some of this, again, just they use, again, these IPOs are a marketing are a marketing scheme, ploy, tactic, strategy, whatever label you want to give it. It's primarily for marketing and exit strategy, but they want to get more money into the overall company, right? So here they just talk about the different levels of Robinhood, what they offer. So they have a gold level, which is a higher level where you have to pay. I forget how much it is. I'm not subscribed to that. I do use Robinhood as full disclosure. I do use Robinhood, right? And they're just showing how easy it is to use it. And I got to bring this up, right? Because people still believe that you need a whole lot of money to start investing in the stock market. When in actuality, you don't. You only need $1. And why do you only need $1? It's because these companies now have the technology to easily sell you what's called fractional shares. Now, fractional shares isn't anything new. It's been around for a long time. But now, again, the technology has caught up so it can be offered at a larger scale. Okay. So now, like I said, you only need $1. They have $5 there, but you only need $1. Now that's where you can start. Anybody can get a piece of the pie. So you can now put your money to work instead of going to the store and buying your $4 or $5 cup of coffee. You can take that $5 and invest it into something that will grow, potentially grow, right, in the future. All right, give me 1 second. 1 second. I'm trying to find some more of the notes I took on this, because y'all know what I normally am about, right? We got to find the money. Where does the money reside with these companies? Now, we talked about it a little bit in the article, but the S1s give you a better idea. Now, here's something interesting. They have 18 million funded accounts, and we talked about that, but here it is again, right? They have 17.7 million monthly active users. All right, and they have about $81 billion under custody. So that's how much money is on the Robinhood platform right now. 81 billion. 81 billion. And Robinhood customers are first-time investors. All right, 50% plus of Robinhood's customer base are first-time investors. So like I said, it's definitely organic, right? They have organic or referred new customers. And they have organic or referred new customers because they've been really smart about marketing, right? About sales and how to get people to kind of gamify getting on their platform. Again, when you share it, I am an affiliate for Robinhood, just for the record. But when I share the link, I get a share, and the people that are opening the accounts get a share as well. Okay, so here's the thing. When we start looking at prospectus S1s, the table of contents will guide you everywhere. It's like a regular book, right? So as we go through this, I was looking at some of the, I could do that on the website. I was looking at some of the risk factors. Now, what I find really, really interesting about the risk factors is they kind of built in some of the stuff because of some of the problems they had earlier this year with the meme crash. All right, so here's something I found interesting. So from January 2020 through March 2021, we have provided customers approximately $1.5 billion in price improvement and saved customers as much as $1.6 billion in crypto transactions and $700 million in options contracts. So they're saying they're getting them better savings because their fees are lower and they're getting better execution. And when I say execution is they're getting better prices a lot of times. All right. Want to get back to my notes here. Now, here's the other thing I think that's really interesting about Robinhood. They're able to take advantage of some of the new some of the new legislation that came out, so they are able to register as an emerging business. And so that's going to give them some leeway, some benefits in terms of reporting. So their reporting standards aren't as high as some of your older companies. So again, just bear with me for a second, folks, while I pull this up. So again, their standards aren't as high as many of the other folks, many of the other companies. Okay, here's some interesting right here. All right, so for their year end, December 31st, 2020, all right, as compared to year end December 31st, 2019, our total revenue grew by 245%. Revenue grew by 245%. All right, to 959 million. All right, that's up from 278 million. So in 2019, Robinhood had revenues of 278 million. Year end 2019, revenue of 278 million, and it grew by 245% to 959 million at the close of 2020, December 31st, 2020. All right, now this is the more easier laid out edition. Again, I have a lot of this highlighted already. We recorded net income of 7 million. So they made 7 million. They were able to put 7 million in the pockets. All right. But previous year, they had a loss of 107 million. Somebody do that percentage. What is that in terms of a turnaround? All right. And their adjusted EBITDA, earnings before interest, tax, depreciation, and amortization. All right. That's what EBITDA stands for. Was 155 million compared to a negative 74 million in the previous year. All right. In addition, for the 3 months ended March 31st, 2021, as compared to the 3 months ended in March 31st, 2020, our revenue grew by 309% to $522 million, up from 128. So they're seeing a lot of growth, okay? And they recorded a net loss of 1.4 billion. Man, when you can lose $1 billion, that says something. What's included a $1.5 billion fair value adjustment to our convertible notes and warrant liabilities compared to a net loss of 53 million. Now, what does that mean, fair value adjustment? So anytime you have securities, you have to do what's called kind of mark the market. You have to, when you do your reporting, you have to say, what are these securities worth on this date? So we're talking paper money here, right? They don't necessarily have to sell. They don't necessarily have to actually convert. Yeah, they don't have to actually actualize the sale, but for accounting purposes, they have to record it as such. All right. All the big dogs said they want that several years ago. Many people don't like it, but it is what it is. All right. So going here, going down a little bit further. Trends in our favor. Technology is transforming customer expectations. Across industries, we have witnessed a movement towards products and brands that redefine the customer experience through technology. Today, people can get dinner delivered. So basically, they're talking about what I just talked about. All right. Now, this stat was interesting. According to PwC is a major accounting firm, major consulting firm now, stands for PricewaterhouseCoopers. All right. If you ever are interested in like these big accounting firms, they used to be called the Big Eight. PwC or PricewaterhouseCoopers were a part of them. Now I want to say it's the Big Four. All right. But PricewaterhouseCoopers says 73% of consumers worldwide point to customer experience as an important factor in their purchasing decisions. And 65% of U.S. consumers find a positive experience with a brand to be more influential than great advertising. Well, we've always said that word of mouth marketing, well, it's always been known that word of mouth marketing is more powerful than advertising, and typically what drives word of mouth? Experience. So for any of you who are business owners, entrepreneurs, keep that in mind. Now, as we go through this a little bit further, we're not going to stay on too long tonight, y'all. I just wanted to talk about again some of, you know what? I did want to talk about this, but I didn't highlight it. Give me 1 second. So it says, our opportunity. Financial services underpins our daily life. Activities such as investing, savings, and spending are core financial activities that offer avenues for Robinhood to grow with our customers throughout their financial journey. That's why they are positioned to bring in a lot of the newbie people, a lot of the newbie investors, a lot of the beginner investors, but they're adding on more intermediate and advanced investment tools, i.e. options, i.e. crypto, to help them progress along in their overall investment journey. So Robinhood understands what's going on. All right, our current retail brokerage, cryptocurrency trading, and cash management offerings are the first step towards a comprehensive financial services platform. So this tells me something. Well, let me read this one more point, and then I'll tell you what it tells me. Our retail investment platform is currently our core product offering, one we have continued to expand since its launch in 2015. Retail investing in the United States represents a large market today. U.S. retail investors are estimated by Charles Schwab, here's that name again, to have total assets of approximately $50 trillion. All right, so they're saying U.S. retail investors have about $50 trillion in brokerage accounts across all the brokerage accounts. Additionally, from January 1, 2015 to March 31st, 2021, over half of the customers funding accounts on our platform told us that Robinhood was their first brokerage account. And so to me, what this is leading to is they want to be able to, they being Robinhood, want to compete on an even larger scale than what they're doing now. They want to compete with the Charles Schwabs. They want to compete with the TD Ameritrades. They want to compete with, well, I was going to say E-Trade, but E-Trade got brought. I can't remember who brought them out. I want to say TD, but I'm not sure off the top of my head. But again, it seems like they're positioning themselves to tech-friendly folks, to millennials and Z folks, a little bit of Gen X, a little bit of baby boomers, but they're positioning themselves to do the next big thing and ramp up. All right, so let's continue to go down and let's see here. Hopefully I'm not boring y'all. If y'all following along, put a 1 in the chat. Let me know if y'all following along. Let's see. A couple more points I just wanted to show. What do y'all think about this IPO so far? Oh, and TB, I have to answer your question. I didn't forget you. All right, so we got some ones. Okay, cool. I never want to bore y'all, but listen, I'm also not going to shoot shine y'all and not give y'all the truth either. Some people don't appreciate that, but the way my integrity is set up, I'm not going to be on here like a Baptist preacher trying to evangelize stocks and say everybody go invest stocks without doing a thorough and comprehensive analysis, or a somewhat thorough and comprehensive analysis as much as possible with the time that I have with you all tonight. All right, so here's what I want to talk about, some of the risk factors, right? So again, one of the things, and this is, a Kamari rant, one of the things that we are not talking about enough in the overall investment community is risk. How to evaluate risk, how to plan for risk, how to mitigate risk. It's really, really important if you want to become a real good investor, world class, right? Risk is everything. It's everything. So in every IPO or every S1, right, the SEC makes companies put in the risk factors. Some of these are like no brainers, but they put them in anywhere, right? So it says things like, we may not continue to grow on pace with historical rates. I understand that. Sadly, some people don't. Everything changes, folks. Everything changes. Then they say, we have incurred operating losses in the past and may not maintain profitability in the future. That's why I always say, and matter of fact, it's not even me, right? Let's go to the OG, the OG of all investing OGs. Warren Buffett talks about investing in companies, not just stocks. And the better company you invest in, typically the stock will follow along and do good as well. But these are some of the things that they have to disclose. All right. So again, some of these things, some of them are regulatory, but I also feel like some of them were as a result of the meme crash. So it says here, if we do not maintain the capital levels required by regulators and self-regulatory organizations, SROs, including the SEC and FINRA, which stands for Financial Industry Regulatory Authority, or do not satisfy the cash deposit and collateral required imposed by certain other SROs and the depository trust companies, National Securities Clearing, right, it's going to say our broker-dealer business may be restricted and we may be fined or exposed to significant losses or subject to other disciplinary or corrective actions. So that's one statement. That's one statement. There's a few others. Right? And let me finish this out. In a worst case scenario, failure to maintain these requirements could lead our broker-dealer business being liquidated or wound down. Basically, the regulatory firms can come in and make them sell their holdings. All right, so that's one. Or so harm to our brand and reputation could adversely affect our business. So, all right, so that's another one, right? I don't know if y'all see where I'm going, but we driving this train somewhere. All right, our business and reputation may be harmed by changes in business, economic, or political conditions that may impact global financial markets. For example, if the Fed Reserve were to increase interest rates, it would impact Robinhood's business. All right. So let's see. I think this is on page 12. All right, so here we go. And then here's the other one. Our failure to properly handle cash, securities, and crypto held on behalf of customers could harm our business and reputation. All right. So what they're saying there, if you follow, remember everybody was mad that Robinhood stopped accepting trades for the meme stocks, for the AMCs, for the, what's the other one? AMC, GameStop, for the AMCs, for the GameStops, for the few others, right, that got ran up because of many of the Wall Street bets folks, and many of the hedge funds that actually were in on those trades too. It's funny that Wall Street bets says they're fighting against hedge funds, but a lot of the hedge funds have major positions in some of these stocks. All right, but everybody was mad at Robinhood because they couldn't get their fix. Right, folks was running around like they had to get a drug fix. Right, like they was about to cop off the corner when when they couldn't buy or sell. Again, their GameStop or their AMC, any of those stocks, they were feeling some kind of way. And there are people now who are still mad, at Robinhood for doing what they did. However, they didn't have a choice. The regulator said they had to do it, or else it was going to mess up the business. So sometimes when the block is hot, right, when the block is hot, you got to shut down. You got to take a couple days off, let the police go away or whatever else you got going on, and just keep it moving. But folks didn't leave that. And I mean, it's so funny. And I just thought about this as I was saying it. absolutely junkie behavior, right? Because the junkies will still come around while the block is hot, no matter what the risk is, no matter what impending danger that they might face. They will still come around and get their fix. So listen, I don't want none of y'all to be junkies. All right. That's why I want y'all to be aware and understand what's going on. All right. So there's a couple other things that I wanted to show y'all. Again, here we'll get out of. I'll get out of your way. Get out of your way. Now, I thought this was interesting, especially for my Twitter LLC people, for my Instagram LLC people, everybody that's promoting, everybody get an LLC. Well, guess what? They got LLCs. Robinhood has LLCs, and they are all owned by a corporation, by a Delaware corporation. So you have Robinhood Markets is like the parent company, right? This is like the umbrella company. And then you have Robinhood Financial LLC. You have Robinhood Securities LLC. And you have Robinhood Crypto LLC. 4 different companies, all running back up to Robinhood Markets, or all being owned by Robinhood Markets. So the reason why you do this many times is because each one of these companies, and I'm talking about the LLCs right now, again, Robinhood Financial LLC, Robinhood Securities LLC, Robinhood Crypto LLC, they all have different liabilities. They all have different risk profiles. They all have different revenue sources too. So they keep those separate. So just in case something goes wrong, goes bad, goes down, that if Robinhood Crypto LLC falls, it doesn't necessarily take Robinhood Securities LLC down, or it doesn't necessarily take Robinhood Financial LLC down. So that's, again, one of the reasons why you do that. That's, again, everybody is kind of promoting these, what they call layering, because this is a form of layering as well. They're promoting everyday mom and pop people to do this layering, but they don't realize how much administration and how much administration and how much money it takes to run it. All right, so going down, right? So I talked about this briefly earlier. Implication of being an emerging growth company. Implications of being an emerging growth company. So that's the designation that they got. So I'm going to read this directly from the S1. All right, it says, we qualify as an emerging growth company as defined in the Jumpstart Our Business Startup Act of 2012, or the Jobs Act. As an emerging growth company, we may take advantage of specified reduced disclosure and other requirements that are otherwise applicable to publicly traded companies, including presenting only 2 years of audited financials. So they only have to present 2 years of financials. All right. Let me read this word for word. Presenting only 2 years of audited financial statements, in addition to any required unedited interim financial statements with correspondingly reduced management discussion and analysis of financial condition and results of operation disclosure in this prospectus. Now, management discussions and analysis, right? Also called MDA. I always usually read the MDA, again, MDA, management discussion and analysis section. You'll see it in your 10Ks. You'll see it in your S1s. 10Ks are your annual reports. Your S1s, again, are your initial report you file with the SEC when you're doing an IPO. But in your management discussion analysis, or your MDA, typically what they talk about in there is how the management sees the company's position, how the management sees opportunities that are coming about. It'll give you a good synopsis of what's going on with that business. It'll give you a good synopsis. But I think it's important that you understand that they have limited, right, by law, limited disclosure requirements. Here's some other ones. Reduce disclosure about our executive compensation arrangements. They don't have to share that. Exemptions from the requirements to hold non-binding advisory votes on executive compensation and golden parachute payments. Golden parachute payments are when they're looking to get rid of somebody. Usually a highly compensated executive will get a golden parachute. So let's say Vlad, who's the CEO, the co-founder, is kind of being sent away. Well, in order for him to be sent away, he has to get a big bag of money. And that's contractual. It's in the contracts already. It's already inked. All right. Exempt from auditor attestation requirement and assessment of our internal control over financial reporting. Now, if y'all remember Enron, WorldCom, that's what like Arthur Anderson, and I'm trying to think of the other accounting firm that was involved in that. It was mainly Arthur Anderson. The problem was they attested to some BS. Now it's saying Robinhood, because they fall under the Jobs Act, emerging growth company, they don't have to worry about a lot of that. All right. Exempt from compliance with any requirement that the Public Company Accounting Oversight Board may adopt regarding mandatory audit firm rotation or a supplement to the auditor's report providing additional information about the audit and the financial statements. So one of the things about going public, it's very expensive. It's very, very, very expensive. So you have to have all these disclosures. You have to hire these people to comb through your books and then produce it to the public about what you're doing or make it open to the public, right? Then it says here, I highlighted this as well. We may take advantage of these exemptions up until the last day of the fiscal year following the 5th anniversary. So following the 5th anniversary of this offering. So they have 5 years from the offering to stay under this. As long as they stay under a couple guidelines. Now, I think they will surpass some of these things, but here, let me read these. The guidelines are: we would cease to be an emerging growth company earlier if we have basically 1.07 billion in annual gross revenue. Well, they're kind of on track for that. We have more than 700 million in market value in our common stock held in non-affiliates, and we have been a public company for at least 12 months and have filed one annual report on Form 10K. All right. Or we issue more than 1 billion of non-convertible debt securities over a 3-year period. We may choose to take advantage of some, but not all of the available exemptions. We have taken advantage of certain reduced reporting obligations in this prospectus, right? So again, that lets you know that they get some special privileges for being this emerging company. All right. Let's see. I should have the financials coming up, but we got to talk about the financials for the most part. So again, I'm not going to keep y'all here just holding on. I'm just holding on. And I know I see you, TB. I see you. I see you. All right. So let's see here. So we done went through over 73 pages, y'all. All right. This is the other part I wanted to show you. These are the financials that I wanted to show you. All right. So listen, y'all know I always talk about anytime you're looking at a company, you want to know where the money resides, right? Are they making money? Is the company making money? Or are they losing money? So as we already saw, they've been making money. But they do have a track record of losing money. Now, again, we only get about roughly 2 years of financials. I would have loved to have seen the 3rd year to see how they've been doing. Because again, where people spend their money, where companies spend their money also shows their priorities and how well they can manage their funds. So it's just like individuals, right? You will see a person's priorities by looking at where their money is going And you can also get a good judge of how well they can manage their money just by looking at the money as well. All right, so in 2019, they did 277, almost 278 million. This report is in thousands, all the number in thousands. What that means is you add another 6 zeros behind the last number here. So this number for 2019 for total net revenues is $277,533,000. All right. Now, going to 2020 is $958,833,000,000. All right. I think I said it wrong. $958,837,000,000. So just know that they take the thousands off, or sometimes it's in millions, right? That's just the amount of zeros that are on the page. They do that for formatting purposes. They do it for formatting. And again, we talked about that 7 million, almost 7.5 million of profit that they made. So the question is going to be, okay, here we go. They have in cash, they have $4.7 billion in cash. Now, in cash and securities, right? So this separate, that first line is what the cash is, right? The second line where it says cash and securities is more like cash-like derivatives, which means that those things in this column can be sold off relatively quickly. All right, it can be converted into cash, not quash, but cash relatively quickly. So this is important. So basically, they got about almost $8 billion in cash. So, and again, they're doing this IPO. They're going to, I'm pretty sure some of the people that were the original investors, or some of the first investors, are going to get cashed out as well. So it'll be a good thing. It'll be a good thing for the investors, that is. All right. And I think that was mainly everything I wanted to go over. Again, this report is 431 pages. I just gave you the abbreviated version. We've been on for about an hour and 15 minutes. So, you know, it can be tedious, right? But again, if you're serious about investing, I would recommend that you read these S1s. I would recommend that you read these annual reports or your 10Ks, right? Especially if you're a business owner. There's so many gems and jewels that are in these 10Ks. You get to see into the mind of major billion dollar corporations at play, and you don't have to pay a dime. You don't have to pay a dime. All right. So who's going to invest? So I'm not going to do like Jose. Well, I'm not sure exactly what I'm going to do. I am going to be looking at this. Normally, I don't look at it at all until 30, 60, 90 days. I'm going to start looking right away because I believe Robinhood, again, is well positioned with newbie investors. They have the market share. They've got brand recognition, all of these things that are important. And their pipeline is open, right? So again, once you do your IPO and you bring money in, doesn't mean you can't get more funding. Doesn't mean you can't get more people in. Like you saw, Salesforce wants to buy roughly $150 billion of this IPO. I believe there will be other big companies who are lined up wanting to do the same thing on IPO day and beyond. On IPO day and beyond. All right, so I see a couple people joined. Elijah, Michael J. Ward, how are you? Two Breaks is breakfast. Guys and investors in the building. Hey, Kaizen. Jocelyn IT, how are you? And all I do is win. I like that. All I do is win. Positivity is important, y'all. All right, so let me know. Let me know. What are y'all gonna do? What are y'all thinking? All right. So TB, sorry for the delay. All right. And you asked the question. Let me go back. Is that the original question? Let me see if I can find the original question. Hang tight, folks. Hang tight. All right. So TB just says, I'm not married, no kids. Should I put 0 dependents or 1 for myself? So I'm gonna tell you how to answer this question, right? And I'm not your accountant. Here's the question though. If you want a bigger refund during tax season, put 0. If you don't care about a refund, put 1. And the 1 will give you more of your money year round. So again, 0 if you potentially, because again, there's some other factors that go into this. So put 0 down if you want to get a bigger refund at the end of the year during tax season, when I say end of the year. Now, again, you said you have no children, no dependents. So you could also put a 1, and that will allow you to get more money out of your check throughout the year. Because essentially, when you do 0, you're giving the IRS, well, not the IRS, you're giving Uncle Sam, the U.S. federal government, your money all year long, interest free. So basically, you gave them a loan all year long, interest free. So you really got to ask yourself, what's the best way to do it? Now, here's the caveat, because I see people talk about this all the time, and it drives me absolutely nuts. People like to do what I call the exemption game. So they'll say, oh, you should change it. Now they changed some of the exemptions, so it's not as easy to do now. But they'll say, oh, you want to keep all your money. You don't want Uncle Sam to have your money, because Uncle Sam, what I just said, right? Uncle Sam gets to keep your money all year long, interest free. So increase all your exemptions so you can get a bigger check. And then you can take that money and either put it in savings or invest it. A lot of times, a lot of these MLMs are kind of putting this out there. Here's where human nature comes into play. Here's where really knowing yourself comes into play. You know whether you like to spend money as soon as you get it. You know if money burns a hole in your pocket, as soon as you get it. So if money burns a hole in your pocket as soon as you get it, you don't want to play any of those games. Why? Why do I say that? Kamari, why do you say that? I say that because for all these decades that I've been doing tax work, and I see these people do these exemption games, most people wind up owing money. And then they're up the paddle they're up the creek without a paddle. Right? And so them being up the creek without a paddle, now they owe the IRS all this money. And they didn't do what the original mission was, to take the money and invest it throughout the year. Instead, they took the money and they spent it. Right? They bought the J's, they got the crabs. They might have had some daycare issues, right? I mean, because there are some legitimate people who might have some real financial needs. Right? So and me having fun, I don't want to disparage anybody, right? Because there's some real people out there that work a 9 to 5 that can barely get by. And so they will play the exemption game. And I get it for them. But when I make these cracks about the crabs and the Jordans, these are clearly people who have misaligned priorities. Well, for this show, right? They have misaligned priorities. They're not going to build wealth by wasting all their money. By the way, I'm not the latte Nazi. I'm not the Jordan Nazi. I'm not the shopaholic Nazi. What I am saying, though, is if you want to be able to do some things and put your money to work for you, you're going to have to sacrifice getting all of this nonsensical things that typically depreciate and value over time. You know what? I need to get the baby boy clip with Ving Rhames when he say, get that money, young fellas. But there's rules to the game when you're getting money. You want to put your money into things like stocks and bonds. I love Ving Rhames' part in that. So again, it's really going to be up to you, TB, what decision you make as you go out there. I just want to help you make the best possible decision. Listen, y'all, I'm not here to help y'all. Let me back up. I'm not here to make the decisions for y'all, right? I'm not here to be y'all leader. I am here to teach. I am here to share, right? Because someday I may not be here. And so I don't want you to be so hooked on me that you can't make your own decisions when the time comes. Again, I'm down to be helpful, right? Please don't take that comment to say that I don't want to be helpful. But again, here's the deal. If you got kids that are riding a bike and they got the training wheels and you're outside with them, that works for when you're outside with them when they're younger. But the goal is for one to get off the training wheels and two, to be able to ride on their own. They know how to cross the street on their own. They know what to look out for. Does that mean that they might not get hit by a car? No, because you got weirdo people who make mistakes. And I shouldn't call them weirdos either because they make mistakes, right? They have accidents. Like when you have a real accident, right? It's real. But then there's some people who ride around with their phone and they're texting and driving, drinking and driving, drugging and driving. And then you have to deal with those people. My dad used to always say, when I would ask to borrow his car, never let me borrow his car. I don't blame him, no. He said, I'm not worried about you driving. I'm worried about the other people, right? But again, so the goal is to make you so thorough, so complete, so understanding that you can do this all on your own. No gimmicks, no nothing. Just straight facts, y'all. Just straight facts. Maddox 12, how are you? Welcome, welcome, welcome. All right, TB, I hope I didn't make you wait too long, brother. All right, we got that. We got that. Any other questions before I go? I got to get to my vittles, y'all. All right. Oh, what's up, Elijah? Financial Anatomy's in the house. Elijah knows what I'm talking about. Talking about that guns and butter, baby. Guns and butter. I'm going to get some new equipment, so I'm going to add that in as a sound bite. Count on that. All right. Yeah, I'm going to put one dependent so I can invest the extra money. All right. But again, make sure you invest it. Make sure you save it. Right. I don't know what your overall situation is. Make sure you put some money aside for savings because when tax time comes, more than likely, you are going to have to pay your taxes. You don't want to have to liquidate your stocks, your investments, your crypto, whatever you're investing in to pay your taxes. Well, ideally, you don't want to have to. All right. So put some money in cash and invest. All right. Miss Edith, how are you? Danny Details, how are you? Welcome, welcome, welcome. Happy Wednesday. DVO, how are you? All right, Jasmine. Jasmine says she always wondered about 0 versus 1, 2. All right. So we at least got 2 people that were interested in this. All right. All right. All right. So I see Hayden's here. All right, Hayden. What's your better, mutual funds or ETFs? So listen, that's a trick question. ETFs, mutual funds, they're all tools, right? And they're different tools for different times that you use in your toolbox to build this beautiful structure of wealth, right? However, I do have my preferred tools. Every craftsman, every tradesman has their preferred tools. They have their own hammers, their own saws, their own brands that they like. What are mutual funds, right? Let's start there. What are ETFs? Mutual funds and ETFs are both baskets, right? They're both baskets where you may have stocks, you may have bonds, you may have currency, you may have, let's say, Chinese stocks, because there's some mutual funds that specialize in that, right? You may have some ETFs that have Chinese stocks or international stocks, right? Just one big basket. The difference comes in with the structure, the ownership, taxation, fees, liquidity. All day long, I'm going with ETFs. All day long. It's a better product. Now, ETFs and mutual funds, they're cousins or brother and sister, right? Mutual funds came out first. ETFs came out around 1993. SPY was the first ETF to hit the market. But yes, Maddox 12 just said it. Less fees. You definitely have less fees with ETFs. That's the beauty of it. And if a lot of reasons why some of the mutual funds have higher fees is because they're actively managed. However, there are actively managed ETFs as well, right? So it's nuanced. It's detailed. I'm a very nuanced and detailed person, right? I'm not just going to run around and kind of give y'all soundbite answers because I think that does you all a disservice, and it actually it's actually an insult to your overall intelligence as well. But I'm not going to get on my rant about media. But again, I would prefer ETFs. Okay, let me go down another layer. Mutual funds. You're not going to know how much your mutual funds are worth all day long. So when the market opens at 9:30, you know what SPY. And again, this is not an endorsement or a recommendation to buy or sell SPY or any other investment vehicle we're talking about. It's all for entertainment and educational purposes only. This is not investment advice, right? But SPY is an ETF that tracks the S&P 500. There are mutual funds that track the S&P 500. We did a whole index class, Index 101. So all of y'all should know what that is. If y'all haven't watched it yet, it's on YouTube. You can watch it whenever you like. But both of them follow the S&P 500. I can't get the pricing of the mutual fund S&P 500 till about 6 o'clock. However, SPY, I get the price at 9:30, 9:31, 9:32, 10:31, 11:31, 12:31, 4:30 when the market closes. Right, I get all that, and there's even some aftermarket activities in some of these vehicles. Right, I get it. I can sell whenever I want, get my cash. If I want to sell and go buy a blue Ferrari or buy a blue Lambo, like all the PPP schemers, I can do that if I got enough money in the account. I personally don't have enough money in the account, but you can do that with a mutual fund. You typically have to wait till they settle. The mutual fund companies that buy the stocks or whatever security they're buying, and then they can release the pricing of everything. All right, so that's one thing. I actually gave y'all two things. Y'all might not have saw it. The liquidity. Again, liquidity. ETFs have way more liquidity because you can get it throughout the day. Again, you can't get it with mutual funds until after the market closes. It's not a super duper big deal, but if you want to make a move, you want to be able to make a move when you want to make it and how you want to make it, right? So that's one thing. Taxation. A lot of times mutual funds sock it to you tax-wise. So Hayden, if you buy the same mutual fund that I brought in January and you buy it in December, a lot of times you get lumped in with my gains and or losses. On the bad side, the gains, that means you're going to pay tax on the gains that I got, and you just got it in December when I started in January. So that's not right, but that's how the ball bounces. So then you find yourself in higher tax situations. So I personally prefer ETFs, exchange traded funds. Now, there are also what's called ETPs, exchange traded products. I don't like ETPs. But guess what? Every ETF is also an ETP. All right. But there are different ETFs. And so just keep that in mind. Any other leverage stuff, they're typically ETPs. They're not ETFs. And the big difference is they're using leverage. They have some kind of synthetic or derivative underlying, and they don't have the stock. Or again, the actual security. They're using some kind of synthetic or derivative to mirror an index and leverage it up. And they get funky, especially with pricing. So I tell folks to avoid them all the time. I tell them to avoid it all the time. All right. So any other questions, folks? Any other questions? We've been rocking for about an hour and a half. Again, if you're just now joining, right, this is the Finance Rebel Show. We are here live every Wednesday on Facebook, Instagram, and YouTube, answering questions and also covering some topics from time to time as well. If you miss some of these, you could also go and find the podcast where a lot of these are repurposed and you can stay up to date to them when you're driving to your job or clients or on the train going to work. All right. So again, y'all, I will be back. I'm not sure about Saturday show. But I'll let you know in advance. But if anybody has any comments, questions, concerns, feel free to inbox me. Feel free to hit me up. Join the text community as well. That's probably the best way to get at me. 215-974-0058. Again, 215-974-0058. Listen, as always, I appreciate you all that are here every week. Next week, we'll be back on Wednesday, right? 8 o'clock p.m.-ish. I'm working on getting better, y'all. Working on getting better. But, clients, I'm at the whim of clients a lot of times, so it becomes a bit challenging. But my promise, though, is that I will be here. I will be here. All right. So, again, I will see you all next Wednesday, 8 p.m. Everybody have a great weekend. And listen, y'all, do something great. I'll see y'all later.